Hey folks, Dan Frio, the rate update. Today is December 9th, 2020. What happened with the rates today? Not too much, but don't go away. I'm going to show you that, as well as I got some new tools that are coming in place next week that could help all of us. Don't go away. So right before we get to the rates for today, I want to give you some exciting new information I got coming out. I got a new tool that's coming out that can help educate all of us. The whole gist of this channel is to educate you guys to be good financial stewards of your money. Okay, that's the number one objective here. I'm looking for a car. Okay, and I stop at like 3 or 4 dealerships, and it just freaks me out. And here's why. And so I get where you're coming from when you're looking for a mortgage. I walk in there, they could probably give me the car under costs. And I would still walk out of there like, ooh, that hurt. That hurt. I feel like I just got in behind, you know what I mean? And so I get it. When you're getting a mortgage, you look at the numbers, it's like, oh my God, I mean, it's like $10,000 to get a mortgage in a lot of cases. It doesn't have to be that way. But I get where you guys look at this and it's like, I really don't want another person, I don't want to talk to somebody else, pull my credit, do this, do that, do this. So I want to leave it simple for you. And at the end of the video, I'm going to show you how you can get, send me your rate quote or your mortgage statement. Let's do this as simple and quick as we can without the least amount of pain as we possibly can. But the gist of the channel is to show you what's going on with mortgage rates. I have some new features coming in January where I'm going to go through once a week and go through all kind of financial tools for you. What's the difference between a 401k and a Roth IRA? What's the best way to find out, where to get a car loan? Why refinance? Does it make sense? I'm going to show you tools that we're going to have for that. Just a whole bunch of financial literacy. I used to do this on my radio show every week. I would have congressmen and wealth advisors, insurance people, credit analysts, all this other stuff. And that's what I'm going to start incorporating in the first part of 2021 to educate you guys on everything financial, to make you a good steward of your money. The gist of this, my daily updates, is to show you financial planners, people that are in the market they're building a house, they're buying a house, they're refinancing their mortgage. How to find the best rate and compare offers. You don't have to go to 100 different places. I say go to 2 or 3. Make me your last one. That's fine. And then just say, here's what I got. Can you beat any of these? If I can, awesome. If I can't, then you did a great job on what you should be doing for you and your family. So let's get on why people follow my channel. This piece is because of this. To find out what the MBS market did. So if you're sitting there watching this saying, I have no clue, Dan, what the MBS market is. Well, you know what? Shame on you. But keep watching, especially if you're in the mortgage business. You're a realtor, financial planner, wealth advisor. But if you're a consumer looking to buy or refinance or whatever, I'm going to teach you. And over the next couple of days, hopefully you can learn a lot, and then you feel confident enough to send me a rate quote or send me your mortgage statement and say, Dan, what can you do for me? So the number we're going to go over here in a second is the biggest factors or the biggest pieces of an interest rate or a mortgage rate is what the mortgage-backed security yield is, and that's a bond that trades on Wall Street. That gives us kind of a benchmark rate. And then there's we call them the loan level price adjustments. And they add to or subtract to the rate. Okay, so let me give you an idea. Let's say the benchmark rate is 3, but your credit score is low. Your rate might be 3.25. Let's say your credit scores are in the 800. Well, your credit score might be 2.75. Okay, let's say, for example, it's a single family home that you live in. Well, the rate still might be 2.875, but it's a 4-unit building that's a rental. Rate might be 3.5. I'm not trying to confuse you. What I'm trying to show you is there's the benchmark rate, and then there's what's called those loan level price adjustments. These are all kind of factors that affect your mortgage rate. Okay, so what we follow here, the biggest thing I can follow is to give you the benchmark, what the benchmark is doing. What the benchmark is doing, and that is this. This is the mortgage-backed security price. Okay, this tells me what the price of this bond did today. Okay, how we read this is today the benchmark price went down. The lower we pay, or the less we pay for the bond, the higher the yield, the higher the rate. The rate went up. Okay, if we pay more for that bond, or the price goes up, that means the yield or the interest rate goes down. So I won't go into huge detail with it, but just remember, the less we pay, if the price goes down, rate went up. It's inverse. So if the price goes up, the rate comes down. So it's an inverse relationship with price and yield, or price and interest rate. Okay, so that's what's going on here. So right now, what I try to do is, or what I do is I monitor what's been going on, and I try to find the trends. So let's get the trend on what's been happening in the last quarter. Okay, so we break down this, and here's the chart of what's happening in the last quarter. Okay, nothing really. You can see this is really stable. If this was a stock, you'd be like, this stock is boring. It really hasn't done anything since September, October. It's December. Okay, but on our side, we love it because it's a stable market. We don't have the wild swings up and down. All right, so we love what's going on here, and there shouldn't really be anything that should affect this in a big way anytime soon. Okay, so, but also what we do is, this might say, okay, for the day, we're down 6, but what really happened during the whole day? Let me give you just some feedback on this. Here's what I mean. Let's say, for example, you've been watching a stock and you like it, and you saw yesterday or this morning that stock was $100 a share. At the end of the day, it finished at $100 a day, or $100 a share. Well, what did it do during the time in between the open and the close? You might see the end result being 0, but there might have been huge volatility throughout the day. So let's break that down. So I'm going to go to the intraday chart. So let's see what happened throughout the whole day. Look at that. Okay. So we opened the market at 3 point. I'm going to look at the little black number next to where my arrow is. It's 103.58. Okay. That's where we started the day. It went all the way up. Again, remember, up is good. The price is going up means rates are coming down. So we were at 103.67. So 103, I'm going to write this down, 103.67. So that was the high of the day. We finished, or we had one point of the day that was 103.52. So the difference, remember we went through 103.67 up here to 103.52. That's a 15.15 adjustment. Okay, what I'm getting at is this is what I do for you. I might have been able to get you a rate maybe 0.1 less than we could have gotten here. Well, that 0.1 you might seem like, that's no big deal. It is a big deal. Over 30 years, that 0.1 might be a difference in your payment of 30, 40, 50 bucks. Over 360 payments, it's a lot of money. If you don't care, then you don't care. I pride myself on this. And this is what I try to help all my clients do, as well as all of my loan officers. Okay, so that's why we follow these charts here. So let's get to some major news today. Huge, I think I posted this already. If I haven't posted this yet, I will here right when I'm done. Huge gaps remain between lenders' mortgage rates offering. So here's what happened in basically not too long ago. When this pandemic started, we hit what's called a forbearance agreement, something that the government and a lot of lenders put together. That freaked out the markets. Completely freaked out the markets. We already had the pandemic going, then we had this forbearance thing, meaning that they're coming out and saying, you know, if you're having financial difficulty, you can skip. Let me rephrase that. You can postpone 3, maybe 6, maybe 9 mortgage payments. And when I say postponed is if you did the forbearance, be very careful, because what they call postpone is when that lapses, many of these programs require you to bring your account current. So if you miss 6 payments or you miss 6 months, and then on that 7th month, a lot of the agreements, and check this if you did this, they want you to make on the 7th month, they want you to make 7 mortgage payments to get yourself caught up. Please don't put yourself in that position. Okay, be very careful when it comes to that. So when the forbearance agreement came out, it shocked us because a lot of people might stop making their mortgage payments for several months. So we had that on our plate. We had huge fluctuations in the bond markets. We had basically almost a catastrophic events taking place at the same time. We then cushioned our profit margins because we didn't know every day the markets were like this. So we actually increased our yields on our mortgage rates. And I don't mean to get too technical with you, but as you're seeing right now with the stability, we no longer have to cushion our margins because we know really tomorrow's not going to change that much with rates. So we don't have to hedge our money as much. So we can tighten up our yields and rates. Just because of that alone, you might see rates come down a little bit. Okay, so there's a lot of factors involved that are changing or affecting mortgage rates. Okay, so that's that part of it. So here's a tool that I have coming out. And this is a tool I used to use a long time ago, and I thought it was just way too technical, so I kind of got away from it. But I'm going to start incorporating this because there's a lot of tools in this new system that I have. It's called Mortgage Coach. It is a subscription that I have subscribed to. It's for mortgage lenders, and I'm going to start incorporating this for those techies out there that really want to dig into some of this stuff. So that being said, let's get on to what my rates did today. If you watched yesterday's video, there is no change in rates today. Because that 6 basis points up or down really isn't affecting our rates. Okay, so I basically want to go through our rates for you today, and I'll go through this pretty quickly, but I want you to understand a lot of things. These numbers here are based on a $250,000 loan. It's a single family property that is the primary residency, okay, meaning you live there. All right, here's the credit score we're using. And here's the loan to value we're using. Loan to value is basically just simply the loan divided by the value of the property, okay? So a loan of 100 divided by a value of 200, 100 divided by 200 is 50%. So in this category, this area right here, I'm looking at a 740 credit score at 80% loan to value. Up through here, it says a conventional loan. It's if you're looking to purchase or do a rate in term. What rate in term means basically you're taking your current balance and putting it back to a 30-year term. Okay, cash out means you're looking to refinance your current balance plus get cash in excess of $2,000. All right, so this right here, if we break this down, my rate today is 2.75 with an APR of 2.83. Now, you can see on a cash out, you're going to say, well, Dan, this rate's a little bit lower. Yeah, but the loan to value is lower. So I just wanted to throw some curveballs at you so you can see, you'll be like, why isn't the rate the same? Well, the loan to value is different. Okay, so the rate changes. The higher your credit score, the lower your rate. The higher the loan to value, meaning we're lending more on the value of the property, the higher the rate because it's riskier for us. We're giving you more money on your property and have less equity in the event of a foreclosure and things. We're not in the business to take your homes. We're not in the real estate business. We're here to lend money. So I'm not trying to scare you that way. But so on a 740 credit score, 75% loan to value, cash out, the rate's 2.625. This is all on 30-year fixed rates. Okay, no points. If we go to a 15-year, now let's look at this real quick. 740 credit score at 80% loan to value. Everything else is the same. All this is the same other than the term. 30-year versus what's the 15-year rate? Okay, so a lower term or a shorter term is less riskier for us because we're going to get our money back quicker. Us, I mean the lender. So you're going to see a lower rate. So 2.75 here, but we go down to the 15-year. Look at that, 2.37. Okay, everything else is exactly the same, but it's a lower rate because it's a shorter term. And the cash out is the same. I won't go into all those details, but that as of today, it's the same as it was on the 30, so 2.62, okay? Now, these are my conventional or the standard mortgages. Now you get into government programs, and we do these as well. And I'm going to start at the bottom up. USDA. USDA, this is one of the programs we're known for. We are fantastic with USDA loans. We can go up to 100% financing, purchase, or refinance. There's are several loans, and USDA means rural, but it doesn't mean it's a farm. We have several properties in California that we're financing right now on purchases. One in particular is an $800,000 purchase. $800,000 purchase, no money down, 740 credit score. My rate today is 2.375, 30-year fixed, no points. So you imagine getting a $750,000 purchase, no money down at 2.375. You're kidding me, okay? So if you don't know if your house or your income qualifies you for a USDA program, please reach out to me or my team, and I'm going to give you that information at the end. VA loans, God bless you. If you were a veteran, God bless you for what you did or are doing. If you're a VA and you have your DD-214 or your eligibility, you can do 100% financing, no money down, very similar to USDA loan, but this you have to be a veteran. 740 credit score, same rate, 2.375 on a 30-year fixed. Okay, FHA, this is where we put a lot of people who have minimum down payments. You can see we'll finance 96.5%. We'll finance that amount, meaning the difference between this and 100 is 3.5%. So you only need 3.5% of a down payment to get into this program. Anybody qualifies for this as long as you have a 600 credit score and meet the guidelines. It doesn't matter how much money you make or anything, you could qualify for this program. You don't need 5% down. You don't need 10% down. You don't need 20% down. And again, that rate is 2.375, 30-year fixed. Now, here's our bread and butter. We do jumbos up to $5 million. We can go over that in an exception basis. If you're looking to purchase a home or do a rate and term, 780 credit score, and I'm just pulling these numbers out. We can qualify you in the high 600s, low 700s, but the best program is when you're at a 780 credit score at 60% loan to value. We can even go 80% loan to value. So I'm just giving you a little snapshot of where my rates are. Up to $5 million, you can purchase a home or do a rate and term at 60% loan to value at 2.875, 30-year fixed, no points. It's under 3%. Okay? Now, this is a boutique program that we have in California. That's where our headquarters are. I'm in Chicago, though. If you're in any of these counties, you can pause this right here. If you're in any of these counties and you need a loan for $1 million or less, pause the screen. Make sure you write down my number because you could buy or refinance your property up to $1 million at 95% loan to value. So let's say you're buying $1 million home. You only need 5% down versus you normally need 20% down. Think of the difference. That's a $150,000 difference putting it down. Leverage your money, guys. Look at the rate, 3.5%, 30-year fixed, no points. That's where I'm today. So you're like, Dan, I like this, but now what? I just saw what you did, but how can I get help? Okay, here's what I ask people to do. One, if you're in the process right now with another lender, you have to have received what's called a loan estimate. So if you're buying a house, you're building a house, you're refinancing your property, you're anything, and you've applied, you get what's called a loan estimate or a fee sheet. Email it to me, and I'm going to give you that information here. I'll write all over it in red and send it back to you I usually do a video, and I'll send it back to you. I just did several today, and the average was about 0.125 to 0.25 lower in rate, and the average fees were about $2,200 less in fees. So I'm getting people lower rates and lower fees. Sometimes, every blue moon, I can't help. And so I'll come back to you and say, you know what, God bless you. What you did was fantastic, but here's still what I can do. Keep that in case somebody throws you a curveball, and they come back to you and say, and this happens a lot. Oh, you know what, I quoted you that, but we can't close you in time. That's your fault, even though we sat on your deal for 60 days. We can't close you, so now your rate's 0.5% higher. Plus, we're going to charge you $3,000 in points. Turn and run. Okay, I'll give you my information here in 1 second on how to reach out to me. So if you're not in the process and your rate is say 3.5 or higher, shoot me a copy of your mortgage statement. We just got some new tools in that I can do what's called a refinance or a rate analysis or mortgage analysis for you. I'll send that to you. And it's very detailed. It'll actually be a video of me walking you through all the numbers. And I'll be the first one, honestly, to say this makes sense or it doesn't make sense. Pay an extra $50, $100 a month. Just get that thing paid off as quick as you can. But we might be able to refinance you, but I'll do those numbers for you. So that's all I ask. So what do you need to do? How do you find me? How do you reach us? So go to therateupdate.com. Scroll down below. Here's our 800 number: 844-775-LOAN. It's 844-775-5626. Or like I said, how a lot of people do it, they email me. You can email me at D for Dan Frio, which is Frio, at preferredrate.com. But if you're like, you know what, I'm working, I can't, I'm working till I'm only off on between 11 o'clock at night and 4 in the morning, and I got to do this online. Awesome. Click here, 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 here. Anywhere you click on here, it's going to go into my database. I or one of my representatives will call you. You'll get a quick little prompt back saying, hey, what's a good time to call you? And based on what you reply, we'll get in touch with you. And also on there is some phone numbers, email addresses, and everything. But if you have any problem getting a hold of us, please email me at dfrio@preferredrate.com. So thank you so much. God bless. All I ask you to do, one thing, if you can do me a big favor, give me a thumbs up. Hit the subscribe button. Smash the bell. Because why? Because every time you subscribe and hit the bell, it helps my algorithms through YouTube get the word out to more and more people. And my whole goal here is just to educate you guys so people can be a good financial steward of their money. So God bless. Take care. I'll see you tomorrow.